Good afternoon, everyone. Welcome to today's Money Talk Tuesday. I'm Sarah. I'm a program officer with the Office of Economic Empowerment, and today's Money Talk will be about attainable accounts with the Massachusetts Educational Financing Authority, also called MEFA. Before we get into the main presentation, I will just tell you a little bit more about our office, and we will go over some Zoom housekeeping notes. Then after the presentation, we will have a Q&A. So the Office of Economic Empowerment is a department within the Office of the Treasurer and Receiver General of Massachusetts, tasked with supporting, advocating, and facilitating policies that empower all Massachusetts residents. Our programs serve women, families, high school students, veterans, and seniors. Our priorities include financial education, closing the race and gender wage gap, racial equity, college affordability, and promoting STEM education. So as you may have noticed, this is a webinar and not a meeting, so you won't be able to view the other participants. But if you'd like to communicate with myself or the other panelists today, you can use the chat feature. Otherwise, please use the Q&A function and we will get to your questions at the end. Once the webinar concludes, a brief survey will pop up on your screen, and we kindly ask that you fill this out as it helps us improve this program. So just some updates about future programming. This year, we've partnered with the American Association of University Women to offer free salary negotiation trainings. So you can see the upcoming dates at the bottom of the screen, and we will share the corresponding registration links in the chat. To attend a future Money Talk Tuesday and other virtual events that we host here at OEE, you can follow this link, which will be included in the chat. To explore other financial topics that might be relevant to your life, you can visit myfinanciallifema.org, which is another resource that our office offers. And as always, if you have any questions or feedback, you can email us at moneytalk@tre.state.ma.us. That's all from me. I will now turn it over to Julie so she can share her screen and get started with the presentation.
Thank you so much, Sarah. Okay. Well, thank you so much. And I'm very happy to be here to talk about the attainable accounts and the able savings plans. So I'll just share a little bit about myself and MEFA. Again, Julie Shields Rutina, and I am the Director of College Planning, Education, and Training at MEFA. And I've been at MEFA since 2007, and I work with all kinds of families with children, students of all ages to help them plan, save, and pay for college. And now with the Attainable program within MEFA, also work with all families, where, as inclusive as possible, all families to help them save for the future, whatever that means. So again, MEFA has been around for 40 years, and we've been doing this work for 40 years, helping families at all stages plan, save, and pay for college, and now other expenses. So the Attainable Savings Plan began in 2017, and MEFA and Fidelity have had a long-term partnership to offer college savings plan, the U Fund, here in Massachusetts. And so with that partnership, it made a lot of sense that we would partner together to offer the ABLE account in Massachusetts. And that's what we've done. And that's the plan that's called Attainable. Now, this all came about because the Stephen Beck Jr. Achieving a Better Life Experience Act. So the ABLE Act amended the federal tax code in 2014 and allowed states to create ABLE accounts. And these are very special accounts that allow families or people to save and with a lot of tax benefits and also allowing people to not lose other benefits. So two really key benefits of these ABLE programs. And most states offer an ABLE account, and the one in Massachusetts is called Attainable. It's also important to say that that doesn't mean it's just for Massachusetts residents. So anyone can start to save in an Attainable account or any of the many other ABLE accounts across the country. So what is an ABLE account? It's an account for a person with a disability to be able to save. And so they open this account and they start saving, and then the money grows tax without any tax consequences. It's tax-free. Any interest is not taxable. And then when they take the money out to use it for qualified expenses, which are very broad, and we'll talk about that, then no tax is ever assessed. So that's a really great benefit. So one key is that individuals must have had the onset of the disability occur prior to the age of 26. So that's important for people to know, and it's a question we receive often. So anyone with a disability who is eligible to receive SSI or SSDI because of the disability, or another person who is able to just certify that they have a disability and meet those requirements. And so this is probably that you have a diagnosis from a physician stating that there are some functional limitations there. And there are a lot of those that are covered in the Social Security Administration's Blue Book of all of the limitations. So the benefits, I mentioned the tax benefits, which are large, but the other really terrific benefit is that it allows the owner or the beneficiary the ability to save over $2,000 without affecting federal benefits. And prior to these accounts being offered, that was not the case. It was many times the case that if an individual saved over $2,000, they risked losing those important federal benefits. So this is really groundbreaking in some ways, and we like to share so that people know about these new accounts. Now, anyone can contribute to the Attainable account, including family and friends. Sometimes it's the individual opening the account on their own. Sometimes it's a parent or guardian or someone who's taking care of them opening the account, and then anyone can contribute. Some of the other nice things are that an individual has immediate access to these funds. Some people might decide they're going to save for later, for the long term, and some might decide they're going to save but use the money as they, as they're living. And we see people using these accounts in both of those ways. So it really provides someone with a disability financial independence and all of those tax benefits I mentioned. Now, when I mentioned, as long as the individual takes the money out and uses it for qualified expenses, then there are no taxes assessed. So here's that list of qualified expenses, and you can see that it's extensive. It really includes a lot. So anything related to health, housing, education, transportation, assistive technology support, employment training and support, personal support services, and basic living needs. So very wide, and anything, if the money is used for any of these reasons, then again, it grows, the interest accrues tax-free. A few other important points are that annually, the total annual contribution this year is $16,000. That sort of follows the gift tax rules. So that's how much an individual can put in the account on an annual basis. However, if the individual is employed, then they can add up to $12,880 more through the Able to Work Act, and that's newer. So that's also a nice benefit. The maximum account benefit cannot exceed $500,000. SSI does gets suspended if the account goes over $100,000, but the account can grow up to $100,000 without creating the need for SSI to be suspended. And there is no annual account fee on these accounts. So practically, we'll share the website, Fidelity's website, fidelity.com/attainable. And that is where someone would go to open one of these accounts. And when a person goes in, they have to fill out a little bit of information about themselves. And then the biggest choice they have to make when opening one of these accounts is how they want the money to be invested. And Fidelity offers a small number of portfolios choices for the individual to pick. And you can see on this chart that those choices range from the top being an Able money market portfolio, which would be relatively conservative and relatively risk-free, all the way to the one at the bottom, which is the Able aggressive growth portfolio, which would allow someone to be invested more in a portfolio, investing in the stock market and all of that, which has a greater risk of fluctuation, going up and down, and being able to be okay with that. But you know how that works. With greater risk sometimes comes greater growth, but there can also be greater loss. So the nice piece is that Fidelity has many experts that are happy to help people with this part of the application. And families can always call and talk with a Fidelity expert who can ask questions about what are you going to use it for? Are you going to save for the long term, the short term? What's your risk tolerance? All of those things to help someone make this choice, which is maybe just the most difficult part of the application. And then a few other pieces. There's no annual account maintenance fee. They're just investment fees attached to the portfolios, as is often the case. And those fees are 0.57% to 0.94% of the assets. But no account maintenance fee, no other fees. And this is just an example of someone investing, and say they start with $300 a month and investing over a long period of time. And you can see that that does grow, and to be able to grow tax-free is a very nice benefit. So the chart shows if someone invests just $100 a month, that could be worth something like $46,000 in 20 years. And that can really help an individual. So opening an account is go to fidelity.com/able or attainable, either one, and then review everything, all of the information there, and then make that decision of how you want to invest the money. And again, it's a fairly quick process. A couple of added tax benefits that came about in 2022 is that if there is a 529 account, and so the beneficiary is a family member or is the same person, it's now allowable to transfer money from a 529 college savings plan into an ABLE account without incurring any tax or penalty. And that isn't just in the U Fund to Attainable, it's any 529 plan in any ABLE account. So that's been a helpful addition. And also that ABLE account owners who meet certain criteria can receive a saver's credit on their federal taxes for contributions into an ABLE account. And we've said it many times now, but as long as the withdrawals are spent on qualified expenses, the Attainable account growth is federal income tax free. And here are some additional resources. The ABLE National Resource Center is a great source of information on all ABLE accounts nationwide. MEFA.org has good information about attainable and ABLE accounts. You can always peruse the fidelity.com/ABLE site. And if you want to receive regular updates from MEFA about topics around ABLE and attainable, you can go to the link there, MEFA.org, ABLE registration form, and sign up for information. And we send periodic updates that are relevant. And then also, because Social Security is connected to this program, you can see the other link there, which is the Social Security Spotlight on ABLE accounts. And here are all the other ways you can connect with MEFA through social media. The newest is our Instagram. And then you can always call us with questions or email us. So thank you.
Thank you so much, Julie. So now we have some time for questions. We have ample time for questions. So if you guys have any questions, you can put them in the chat or the Q&A and we can answer them.
That's great.
We did have a question about whether or not this presentation will be recorded. It is being recorded and we will upload it to our YouTube channel either later today or tomorrow. And we will also send out a link in the follow-up email so you can share that with your networks. We have a question, and this question states, what would not be considered basic living expenses? Since that seems very broad.
No, that's terrific. And a very good question, because you saw how broad those qualified expenses are. There is nothing stated that I can say to you that is definitively not considered a qualified expense. However, in the past, people have pushed me on things such as, can I take a vacation? I can say that that's for a better life experience or things like that. I guess I would just say that when this would come up for you is if you were ever audited by the IRS and you would have to prove that you spent the money on a qualified expense. I guess you just want to be cautious about being in a situation where you're having to prove to the IRS that it is a qualified expense. And so maybe something, this is a personal opinion, maybe something like a vacation, I wouldn't want to find myself in that position. But other than that, anything that is helping your life and helping you have a better life is going to qualify here. So I guess a last tip I would say is to keep very good records, as we always would when it comes to anything that's tax related. Keep all of your records when you're spending and using this money. Make sure you just have a folder with receipts and keeping all of that, just in case you were ever audited and had to talk about that or prove that. But again, the qualified eligible expenses are very wide and broad, and that's, I guess, another terrific feature of these accounts.
Thank you. We got another question about who the account is under. So this question says, it sounds like you were saying the individual with the disability starts the account, and this person is thinking of someone who is a 10-year-old family member who might benefit from this.
Yes. So it's correct that the individual is the account owner and the beneficiary both, but in many cases it is someone else, like a parent or a guardian, opening this account for an individual. And in that case, it would be the person of signature authority, a PSA, and that happens a lot. So that would be fine. That again, the person with the disability is the owner and the beneficiary, but someone else is managing the account. And that can be forever, or that can be for a time and then be changed. That person of signature authority could be changed. And that's how that would work.
Any other questions? I'll give folks a couple of minutes if they want to type something up. We got a question. Does this preclude things like living in a group home?
And it does not. So that's okay. That would be living expenses. There is something, so we can look into this a little more closely, but there is something about, in general, using money to pay housing expenses within the month that you withdraw it. So we can talk about that a little bit more, but that's the only expense that seems to have that caveat where when you're paying rent or, housing expense, make sure that you pay it in the same month that you withdraw it from the ABLE account.
It's important to know.
Yeah.
Someone said it sounds like a savings account, but with a lot more benefits.
Truly, yes. And I will add, thank you for putting it that way, that yes, for the Attainable account with Fidelity, there is a cash management account that can be attached to your Attainable account, which then would give you a debit card and easy access, just as you just described, an easily used account with all of the transactional benefits that are also connected to the account.
Is there insurance with any of these accounts?
There isn't insurance. I think is someone asking maybe about FDIC or something like that. So there isn't one of those choices. Although again, as we saw, the choices range from money market to more aggressive portfolios. These are great questions there.
All right, I'll give it another minute or two for additional questions, but like Julie shared, all the contact information and additional links that you can go to find specific answers. If you have any additional questions, you can always reach out.
Absolutely, yes.
Someone asked, can someone divert their child's foster stipend payment to this account now that this child has been adopted?
So, it's always a good idea with those very specific questions to check with Fidelity or call us, on an individual basis. But yes, I mean, basically any money up to the maximum for the annual amount, which is 16,000 this year, yes, can be put into this account. So yes.
All right, if there are no other questions, I'm happy to close it out here. Thank you again, Julie. It was such an insightful and informative presentation. And I know this is a resource that can be useful to so many people. Like I said, we will share all of this information in our follow-up emails. You'll receive a recording of this presentation tomorrow, and it'll be uploaded to YouTube so that you can share it more broadly with your networks. And thank you all for being here today. If you ever have any questions, email us. I can forward it to MEFA if there's anything specific you need assistance with. But thank you again. It's a good start to our Money Talk Tuesday season this fall. And we hope to see you all next time.
Thank you all. Thank you, Sarah.
Bye, everyone.